Welcome back to Upside Down Data. Let's talk about Chainlink. If you're not familiar, Chainlink is mainly known as being an oracle, basically a project that allows people to access outside information in a blockchain environment. The idea would be that any given blockchain only really knows what's happening on its own blockchain, and so it needs something to help it get information from outside the blockchain. So for example, for DeFi projects that want to reference prices that are outside of whatever blockchain that DeFi protocol is running on, you'd use something like Chainlink to bring in that information so that you could reference it and then have the protocol function. Now, Chainlink also is branching out into the cross-chain communication space with their CCIP protocol, which is just getting up and running. And so it's really a combination of these things that gets people excited about Chainlink. Many different projects use their Oracle services, and the speculation is that a lot of projects might start using their cross-chain communication protocols. So that's really the niche that Link fills. Now, given this, a lot of people were very excited about Link going into this cycle. Link was a very interesting behaving asset, even coming out of the bear market. One of the things that was quite interesting that we talked about a lot was how Link actually held up better than Bitcoin through the latter part of that bear market. You'll see that Link was just going sideways while Bitcoin actually had more capitulations that it went through over that time. But then Link just remained behind as Bitcoin went up and then finally started to catch up over here. And notably, during this run up at the beginning of the cycle here in October, Link was one of the first moving altcoins that there was. A lot of hype and buzz was generated by Link here. And I think that made a lot of people think that Link was just going to be a very strong mover for this cycle and really outperform a lot of the rest of the altcoin space. And then when that didn't happen, when Link really bogged down up here in this range between around $12 and around $16, people got frustrated and said, why is Link not moving further? And then even with this leg up here, people were kind of fed up with it. And now Link has become a very hated asset by a lot of people. It was quite hated during this whole range through here because it didn't really do much. And now a lot of people are getting fed up with it. So I want to talk a little bit about whether or not that frustration is warranted. I want to talk about some reasons about why Link has maybe been struggling more recently. And then I want to talk about what our data are seeing to see if they suggest that Link is actually going to be able to resume its relative strength relative to the market, or if it really will be struggling throughout the rest of the cycle. So let's go ahead and get into it. So one of the first things I wanted to talk about here was to compare Link's price chart to its market cap chart. One of the things you'll notice is that I have this red box up here. This was actually one I put in there right after Link broke out of this range here as being a relative target for it to hit. And you'll notice it hit the bottom of that chart, which is about the same level in terms of market cap terms that Link had hit back here in early 2022. Now you'll notice that if we look at the price chart, Link's price did not get back up to that level it had been in early 2022. So what gives? Why is the market cap a different shape than the price chart? And simply put, it's the circulating supply. There's been an increase in circulating supply for Link. And we'll notice that's actually increased a decent amount since back here in mid-2020. It's actually up about 67% from then. We were at 350 million, now currently up at 587 million Link in circulation. And market cap is calculated by simply multiplying the price of the asset by its circulating supply. So if you have more circulating supply now than you did back in the past, then you can get to the same market cap level with a lower price because you now suddenly have more supply that you're multiplying that with. And that's why you're seeing this deviation where we're seeing price struggling to get up to these levels that market cap is now hitting. And that's really a function just of this increase in supply. And that's another thing that's important is that as supply increases, the amount of demand that you'll probably need to get back up to the same price that you were before is going to increase. It's going to take more demand for Link to get back up to this price here than it did back at this time in early 2022 because we now have more supply on the market. So I think that's really the kind of X factor for Link going forward. One of the things that's a little bit unfortunate with Link is that it doesn't have a clearly defined unlocking schedule, or at least all the research I've been able to do suggests that that's the case, that it seems to be much more flexible in when and how much Link they will unlock and put out onto the market. And that can make it kind of hard to predict how this is going to shape up. Does Link continue to inflate its circulating supply at a quick pace? Or maybe we'll have another period where this slows off. And what we might want to see to think that Link can really have better tokenomics, or kind of better supply dynamics, is if it would be a slower unlock. A really rapid continuation going up to eventual its max supply at 1 billion would be concerning, because that might suggest that even if Link can maintain a high valuation in its market cap, that might come at the cost of actually sacrificing explosiveness on its price, because more and more supply would have to be absorbed into the market. So when we're looking at this recent kind of sluggish price action, a part of it, though certainly I'm not arguing this is the entire dynamic here, but certainly a part of it could just be that more and more Link has been hitting the market, especially when we just look at mid-2022 through now. Quite a bit, about 100 million, a little bit more than 100 million, 120 million new Link has entered the market just during this time, which may have been acting as a counterforce to make it harder for Link's price to move up as much. And so when you look at the market cap, this might be kind of that reflection of where is the overall value of the network, but that's not all being represented in the price because it's having to absorb that increase in supply. So that's just one thing I wanted to talk about at first to maybe understand what's going on. And something that I'm personally going to be watching is how much does the circulating supply continue to increase? Does this slow down? Does it speed up or stay the same? It might give us a sense at least of that part of the Link market of what we might expect. Okay, so that's one of the kind of contextual pieces I want to talk about with Link, some of the supply dynamics that people don't always talk about. Now I want to switch gears a little bit and talk about some of our models that we have at the channel and what they're seeing about Link's recent price action and where it might be heading next. So here what we're looking at is our short-term upside downside potential indicator. It's one of our risk models that we have here at the channel. Higher values mean higher risk, lower values mean lower risk. And one of the things I talked about in my last video was how Link's short-term UDPI, short-term risk, was falling off notably, getting back to levels back at the time I recorded that video that set the staging ground for this next little leg up we had here. But I mentioned that even though it's possible we could run from here, we might have to test these lower levels first, get risk back down to these lower, deeper value zones before we can really expect to find a notable local bottom to set the stage for that next bigger move up. And it seems like that's exactly what we've actually ended up getting. Risk is already back down, getting towards the lower end of what we saw in this whole range here for over a year in 2022 into 2023. So it might be that somewhere around here is where we might expect a bottom to form to then set the stage for a reversal and then hopefully a next stage up. So not financial advice, you should make of these data as you will, but I do think that the short-term UDPI being here is certainly more favorable than it was even back here over here. Because the way that this tends to work is that when you get a rally, especially in a bull market, the lower the risk was when that rally starts, usually the further up that you can end up going. Look, for example, back here in March 2020, really had a low short-term risk level at that point, and then that set the stage for this massive expansion that we saw afterwards. And I'm not arguing the same thing will happen again exactly here. They'll have this massive just bull market off to a massive, market cycle top or anything like that. But certainly that tends to be the dynamic, that the lower the risk goes, the better the expected return tends to be at some point in the future. And I've actually done back tests. You can look back at earlier videos where I show that relationship. Lower UDPI levels tend to lead to better returns, for example, 6 months in the future, a year in the future, so on and so forth. There tends to be that association. So that's where I think the lower we go, just the better the opportunity this might end up being. And especially if we see this happen and maybe we don't see supply continue to increase at such a degree, that might set the stage for Link to really be able to move to a more explosive way. Now, before I get too excited about us seeing a rally in the shorter term, I'd like to see our trend confidence indicators start to look more constructive. So this is a model that cares about trend, as the name suggests. And really what you want to look at with this model is how is it moving relative to price? So you see the TCI start to move up aggressively, price will tend to follow. But you see the TCI start to move down aggressively, that suggests that that uptrend is likely over, and then you're probably going to correct or at least consolidate from there. And then you have another expansion, TCI starts moving down, consolidation, another expansion, price moves up, and then the TCI is moving down. Was a suggestion that weakness was entering the space, and indeed we've now gotten that correction. So what I like to see coming out of here is an expansion on the TCI. See it really start to move up more aggressively. And if that happens, that might be a suggestion that strength is re-entering the Link market. We might have another one of these legs up like we've seen in the past when we've gotten these moves up on the TCI. So it's still too early to tell if we're there yet. I'd like to see us kind of break above this kind of descending trend that we've seen here, really break above those levels to get more confident. But if that happens, along with short-term risk being quite low, that might be a nice suggestion that maybe that's where we're going to find that local bottom and actually be able to put in another move up. So still too early to tell if we're there yet. We might still have further we need to fall on short-term risk before we can find that level, but something I'm going to be watching closely for sure. If you want to watch these data for yourself, you can do so at our website, claritydigital.io. Link is in the description. So now I want to zoom out a bit and talk about longer term considerations with Link as we stand right now. So this is the long-term upside downside potential indicator for Link. It basically is a risk model like the short-term version, but it cares about moves that play out over months to multiple months, so much longer in its time horizon. And what you'll notice is that ever since we started this run in this cycle, all the way back here, September 2023, that's when we were back at these really deep negatives. We then went up to a very high long-term UDPI level, 3.6, suggesting that the upside potential is getting quite tapped out at that point. Then we did cool off, come back up a bit, but now we're finally starting to see it come back down to these really deep negative levels. And that's what we'd like to see, because again, when you look at the long-term UDPI, when you rally out of these really low levels, or at least these really low levels tend to mark these good accumulation points in the longer term that can then set the stage for these broader moves up until you get up to these really high levels that can end up marking more notable local tops, if not the kind of market cycle top before moving down. So I think if we get back down there, that would be a hopeful sign. And what's also useful to note is that we're getting down to these levels now at significantly higher prices than the last time. I mean, just look at this. The last time we were down at these really deep negative levels, or even just the last level where, time we're at this level at all, back over here, prices at about 7.36. Now we're all the way up here, almost double that value. So this suggests to me is that the model is now thinking that even at these higher prices, the risk reward, or the upside versus downside potential in the current point in that longer term is looking much more favorable. It's looking similarly favorable to how it was back through here. And again, we could have more room to fall here, but it might just look like a better and better opportunity. And I think that's a good sign if we can find that at higher prices. For example, the same thing happened through here. We had this big accumulation zone, an expansion, came back down. You'll note that these low UDPI levels here were happening at higher prices than here. And then, of course, those were great opportunities going forward. So not financial advice, but that's just one thing that I think is useful to note. This is very much a bull market type of behavior that you'll see. You'll have an expansion. You'll then have a reset on risk, but you find those lower levels at higher prices because you're in that bull market. The downside potential is now lower. You're not going to get down to those same prices again, most likely. And then you still have a lot of upside potential to work with to get up into those higher and higher prices later on in the cycle. So that's what I'm seeing with the long-term UDPI. Now, the final model I wanted to talk about here was the momentum bias indicator, or MBI. So this is a model that cares all about momentum, and it's really looking at, is momentum biased to the upside, like what happens in bull markets, or biased to the downside, like it happens in bear markets. And then what you'll tend to notice is distinct phases of behavior at different points of the market cycle. When you're in these periods where the green is far outweighing the red, that's kind of an expansion period, a bull period, where you'll then move up. You might then have an accumulation zone where you're kind of oscillating around zero, kind of equal green and red, and then another expansion period, maybe chop down into the red a bit, more expansion. But then the opposite happens in a bear market where you're spending a lot of time in the red, very brief moves back up to the green, and then just red, red, red. And then here in this big zone, this is a big accumulation zone. We talked about this at the time. This transition out of the bear into the early stages of a new bull potentially had the big expansion, and now we maybe are just doing this kind of accumulation again. Now, we have gone very deep into the red here, and so one thing that I'm going to be watching personally on this is, can we bounce back up and then go back up into a reasonable high zone here? What would be more concerning for Link going forward is if we do something like we saw back through here. We get into these deep red levels, and we just can't hold a positive momentum bias at all the next time we try to do that and just keep moving down, down, down. That might be a suggestion that we're actually entering into a more bearish, more protracted bearish period for Link. But I think if we can rebound from these levels back to the upside, like for example we've done here and then close to doing back through here, might be just a suggestion we're in a new accumulation zone for Link at these higher levels, like for example what we did here, and then we might just have to wait a bit before we get that next expansion. So far I still think that we're not inconsistent with a continuation of the bull market here. But again, I would like to see this rebound quickly, get back up to the green and be able to hold that in not too long. If we don't do that, and especially if we get rejected off of around zero and move back down aggressively, that'd be a concerning sign suggesting that maybe something has actually really fundamentally changed and maybe the bull market is not really as clearly there anymore. But so far, I don't think we're at that point yet where I'm going to be saying that that is my base case. So to kind of wrap up my thoughts then about Link, I think it's really important just to understand what the underlying dynamics are, where Link has seen an increase in its circulating supply, and that means that even at the same market valuation that we've seen in the past, its price will be lower. And we need more demand. We need new demand to come in to push price higher and higher to overwhelm that new supply. Certainly that could happen. There could be new narratives that Link fits with, especially in a bull market. Narratives tend to matter a lot. Could be that the CCIP cross communication protocol ends up coming out and really catching a lot of attention and a lot of speculative demand. That could be another source, or any other number of things. But it is just useful to note that that is one of the underlying dynamics going on here that makes it a different situation from where we were back here. More supply just means we'll need more demand to get back up to the same prices. And so it can be a little bit risky to anchor yourself on the prior cycle's prices, because this is a different supply situation from where we find ourselves now. And so to think these are easily in range, we also have to think that there's easily going to be enough demand to get us up there and then above. Certainly could happen, just something to keep in mind. When we look at the data, I do think that in the shorter term and even in the longer term, it would make sense for a bottom to form here before too long that could set the stage for that next leg up. But then obviously it's up to you to think, will enough demand come in to make us just explode way beyond prior all-time highs and go higher and higher and higher? Or do you think that we'll struggle to overwhelm this new supply that's been hitting the market? That's something I'll leave up to you to speculate on for yourself. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us over on X. A lot of updates for our models and more over there. And go to our website, partydigital.io, to see live data from our models and more.